Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, November 16th, 2022. So quick note, tomorrow, the report will be out a little bit late. I'm going to be traveling back to the Northeast, and I don't think I land until about 2 o'clock. So the report may not be out until closer to 4 or so. Today, we did see the expected backing and filling. It looks like it's just consolidation. So I wasn't looking for any kind of major crash, but I believe that we'll see a test of either the 39.31 or possibly the 39.11. If you're going to be conservative and you took the say a piece of the short position at the 40.25, I'd start scaling out because this actually looks like it's going to be coming down and then back up again. So you don't want to be short when if we're coming up to the 41.17. And if we come down here, let's just say we close it at 39.31, you made 90 points. Then you start building the long position when it comes down here, which I would be a little more safer. I'd feel more okay doing that because this move right here just seems like it's very over exaggerated for a reason that I believe they're going to be all wrong. The Fed isn't going to pivot. The Fed isn't going to do any of that. But for now, we're in a bullish time period, so we're going to respect that. And this was always just a trade on the downside. And the safest trade has always been to simply wait for these little pullbacks and buy the dip. So that's right now I don't let me just take a look at what the futures are doing. Uh so they're plus 750, nothing major. But in any case, this is the hour. I'll say so on the 15-minute chart. You can see that we actually have some bullish divergences here. So to me, we probably are going to get some kind of pop up, and I would keep an eye anywhere from the 39.74 up to the 39.81. This should be really where the bears step in to try to defend the move to the downside. Now, if they lose the 39.80, then we're probably coming right back up to the 4,000 level. This is the line in the sand where if the Bears lose this, then we're coming up to the 40.45 level. So as far as wave structure, the best one I have is, here's our A, B, I'm sorry, one, two, three, and now we're making our wave four, whether it comes down at the 39.30 or a little bit lower than that. That's going to be our wave four, and our wave five should take us up to the 40.52. And from there, that's where we should see a little bit more of a pullback where it's going to retrace 50% or more from the move from the 3,700 up to say 40.30. So it should give us, it should pull back probably down to the 38.50, maybe even come down and close this gap. But we still should have one more push up. So that's why I wouldn't be getting aggressive on any short positions. So the bullish divergences are saying that there's a chance that we could see the bulls step in. Here you can see we had the bearish divergences. They worked off a lot of the overbought levels, but we just went from 40. Well, it's not a bad move overall. It's 70 points. So it's respectable. And that's where I'm looking at, this 39.20. I would just step out of the short side, and then if it keeps going lower, so be it. Then we're just going to wait for the support for the next move higher. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.